everybody, thank you for clicking on our link. My name is Butch Swank from Goodlad Swank Insurance, and I want to give you a couple of answers to some very common questions we get. There's basically two questions we're getting several times per week, and I think it's important to share these two to save you a little bit of time. The first one that we get is, how do you guys figure out the valuation of my house? Like, you came up with $300,000, but I paid $500,000 for my house. How does that work? So if your house burns down or gets blown away by a hurricane, we want to make sure that your house gets built back just the way it was. So it's important that you work with your agent, and your agent does the math to figure out, okay, this is what it costs to rebuild this house. So the part that confuses people is the land that your house is built on, that's also worth something. So there's a difference between a market value for your house and then the replacement cost of your house. So always try to factor that in. And then another thing to think about is when you're talking to your agent, there's different kind of grades of house. So you can have a contractor grade, which is the baseline. You can have some incredibly gorgeous, like $500 per square foot house. So that if we're talking on the phone, we're not sitting there in your house, tell us what you have. I mean, let's go through, we don't need to do the exact nitty gritty, but we do want to have a pretty good understanding and appreciation of what's inside of your house. What is your house built of? And so that we get it back to the way it was before whatever happened happens. The second question that we get a whole lot is essentially, how do deductibles work? In Florida, we have a hurricane deductible, and then we have a AOP, which is short for all other peril. So the hurricane deductible part is the most critical component in terms of cost. You get like a 5, a 3, or a 2% deductible. So if your house, let's go back to the $300,000 valuation for the house. If you have a 5% deductible, that means that $15,000 out of the $300,000 is your responsibility. So essentially, the carrier will be getting you a check or paying for the replacement of the cost up to $285,000. So that's some skin in the game on your part. So keep in mind, the higher the deductible, the lower your premium. So it's a balancing act between, if we're going to take a gamble that we're going to pay $15,000 for something catastrophic, a brand new roof, something like that, or if you go down to 2%, you're only responsible for $6,000. So the $6,000 person is going to pay more per year, and the $15,000 person is going to pay less per year. So it is literally a balancing act. So talk to your agent, figure out what makes sense to you. Now, there's one other thing that I want to share, and it doesn't get looked over, but it isn't discussed as often, we don't get enough questions about it, is the liability component to your homeowner's insurance. There's slips and falls, there's accidents, stuff happens in your house, so be mindful of the fact that you do need, I mean, it's going to be a component of your policy, but you want to be aware of what your limits are, what you're paying for, and just keep that as in the back of your mind, because people just talk about replacement costs or deductibles. We live in a society that is prone to all kinds of lawsuits, and you want to make sure that these liability aspects are covered as well. So hopefully that's addressed all the questions. If you want to do a deep dive, you want to review something in particular, I invite you to call our office. It's 239-674-7630, or you can go to our website, which is goodladswank.com. So thank you very much for coming.